HDFC Bank and RBL Bank have both made higher provisions in the June quarter, while HDFC Bank witnessed a deterioration in its retail book, particularly in the agri segments. Its younger peer, RBL Bank, sees pressure from some of its corporate accounts in the coming quarters. Are these asset quality pressures specific to these lenders or a larger trend at play in the banking sector? Let's put all of these questions to Ravikant Bhat of India Nivesh Securities, who's joining us on the phone line right now. Ravikant, obviously, while not looking at the numbers per se, but the commentary that both of these banks managements have made has been slightly of a bigger concern right now for even someone who's looking to invest in a marquee name like HDFC Bank.
Well, yes, I would agree that the management has sounded caution. And so, I mean, if you want to just segregate, I think as far as agri is concerned, we know for the last 8 quarters that this is going to be an on and off pinpoint. It keeps emerging every alternate quarter. So the expectation is the agri stress would subside in second quarter, maybe re-emerge in third quarter, and again subside in the fourth quarter. So this is a bit of a seasonality, given the fact that HDFC Bank has started originating its own agri loans since quite some time now, and so this is a given. I think this is expected. I think the other part actually was the management really sounding caution. So they were categorically saying that they haven't really stopped lending to certain segments, but they are definitely watchful. There indeed was a slowdown, and I think if you look at the retail loan numbers, they were slower than the headline growth number, and that definitely is a bit of cause of I won't say exactly worry, but given that HDFC Bank is the market leader, and one would expect them to still stay ahead of peers in grabbing market share. But still, there is a slowdown, particularly driven by the vehicle segment, and fine, but the passenger vehicles has slowed down, and that definitely is affecting the loan growth. So I think so that's a point which you definitely cannot miss. We are still expecting that this would be made up by the corporate side as we move into the year, because there was runoff on the wholesale side, and that also did affect the loan growth. So let's say, in the second half, the loan growth should be better.
The interesting part now is that all up until now, we'd seen the corporate book failure. We'd seen some of the larger corporate accounts giving way. Now we're starting to see stress within the retail books as well. So do you feel that this could be the unraveling of the NPA cycle within the retail loan book?
No, I don't feel that, there could be a big unraveling as far as the retail loan book is concerned. So clearly, if you look at the RBI data, we have certain parts like credit cards growing quite robust, in a quite robust fashion. So obviously, there are a lot of consumer spends over there, and given the fact that select banks are major acquiring banks, card issuing banks and acquiring banks, we tend to be watchful with this. But still, we have come a long way in the last decade and a half, and the CIBIL data does provide, a strong comfort, coupled with the fact that banks have their own budget. So I would be selective. I would, to HDFC Bank, I would still be inclined to believe that there's not going to be a major unraveling, except the fact that, if you're talking of agri as a part of the retail, then yes, there have been certain pain points, and those will continue. I think at least a year ago they had said that they will no longer be in the sweet spot of 90 to 110 basis points cross NPS. That has gone away. So, ideally one should expect HDFC Bank to stay in the 140 basis points cross NPA range.